Good afternoon, all. CamelbackTrading.org coming to you this Tuesday afternoon, July 19th. We are looking at window traders. Market profile of SPY, IWM, and triple Qs. A lot to talk about. This video might be a little longer. So I want to go over a lot of things. So first and foremost, Netflix earnings came out after the bell. And look at the way the triple Qs just spiked up on these little spit out algorithms. They got above 300. So that's number one. Number two, both triple Qs and the Russell got above their 4-week balance highs. And more importantly, they came out of inside weeks to the upside. And for now, have held them. Obviously, Netflix is going to help triple Qs going forward tomorrow. We just missed our balance high in SPY and ES. Our high today is 392.87. The balance high is 393.16. So we just missed our balance high for now. We'll see if we're going to be able to get it tomorrow. Triple Qs took back a lot of that gap from back on June 10th. They only leave about 80, not even 80 cents. I'm not sure what their high was in regular trading hours. The gap gets filled at 299.23. So they have about, I'm going to say about 60 cents left. Russell never got close to that gap, but that's their next big hurdle to get to. Same with us, but first we have to get above our balance high. Now, I just want to go over one more thing from yesterday because it is amazing. You know, I chastised myself for not seeing the day right yesterday when I was long here in G and H and I. But I don't think I really did see the day wrong. You know, look, the bottom line is I lost money and I got out of the trade when I took out H's low. But basically what we did today, all we did the first hour and a half of the day is take back yesterday. And then we did what I thought we were going to do yesterday. When I thought we'd get back to 7 wide, where we were 7 for 7, grind towards the high, and then see what happens above yesterday's high. So that's all we did today. We took back this absolute nonsense for whatever the 3-hour reason they flushed out. Hurt every one of these shorts today because look where we opened. So anybody who went home short below H's low, for the most part, got hurt. And then we go out. We had a triple distribution day down yesterday. Well, guess what? We have a triple distribution day up. So does Q's. Russell has a double distribution. Utterly amazing. We pulled back an M period right to the 50-day moving average and then went and price probed. So for now, we closed above the 50. I'm not going to go over all my trades because I want to show you something on the charts that's very interesting also. I had a good day. I had one losing trade today. I took one short in J period, a small 10-lot put play to see if we would stop at the 50 the first time, and we really didn't. So once we got above it by about 20 cents, I was like, okay, I'm done. I'm out. But for the most part, I did take two-sided trade today. I certainly didn't short when the market was ripping in B and C, but I did take visual levels that were decent, like yesterday's high I took a short against. It backed off the first time, things of that nature. But nothing was really big. I did a lot of ebb and flow on the buy side when it pulled back in D and E. I did the same thing in J and K with some longs. So it was a good day overall, which I needed pretty much after yesterday. So my mental capacity feels good because even though financially I got hurt on that yesterday, I still, today kind of proved to me that what I was looking at was right. Unfortunately, it happened 24 hours later. Now, as far as destinations, upside 392.87, today's high. Then our balance high of 393.16, which is a weekly high. Then 394.25 afternoon rally high from June 10th. And then the real big one, 395.78 daily high. And then filling the gap at 401.44. That's a 566-point gap from June 10th. That's only 5 weeks ago. It seems like a lifetime ago. We traded down to 362 in that interim. It's amazing, right? For the downside, well, just like we had a lot of upside destinations to lean on, and they all got taken out, now we have a lot of downside destinations. 392.16, J's high, the price probe. Single prints, that would be K's low to H's high. 391.04, they get filled to 390.52. Then we have the afternoon pullback low. Now it's very close to where the singles start, but I'll use it. 388. 388.79. Then the second set of singles, 388.70, get filled at 388.19. D's low to B's high. And then C's low to A's high, 381.71 to 386.92. And then today's low of 385.39. So we will be treating this, just like yesterday, as 3 separate days. Now today we opened up above the lower distribution and the middle one. We opened in the singles. And all A period did was fill in the volume that, right, when they finally flushed yesterday, there was light volume on that flush. Well, A period spent the time frame kind of by paint by numbers, filling in the volume. B never saw the opening, and it was off to the races. We never even pulled back. We pulled back 10 cents in F, 20, 30 cents in K. This market had a mission, and that was to hurt everybody who shorted yesterday and get back to what they were doing. So again, K's low to the day's high is one distribution. G and H's high to D's low is the middle distribution. And then A's range is the lower distribution. Okay? Now, I want to show you something on the charts, which I think is pretty interesting. We went over it in the room today. Show you on the weekly and the daily. First, let's go to the daily. So remember I said yesterday I'm keeping the daily up? I said, look, we didn't take out the previous day's low. Well, guess what? I'm glad I did, because we are still firmly up. Not only are we up, we're one-time framing up 3 days, and the gap is still my main focus. So here's the question we have to ask ourselves. Does this gap get filled first, or the big one up here? I don't know. 20 is curling up big time. We got above the 50. Now, this is what I want to show you. So the daily's up. Even though this was very impressive today, all of 2022 has been vicious short covering rallies. Okay? Now, I think where we are today and going forward is a very important point, and here's why. Here's the all-time high. Here's January 4th at 479.98. Since that day, that's that high, market sold off, attempted to rally. We got as high as 462.07 on March 29th. So 3 months later, that became a lower high from the all-time high. Then we sold off again. We attempted to go back up on April 21st, 450.01. So that's the second time since the all-time high we attempted to start grinding back higher and failed, right? Now, that was a pretty short one, right? That was from March 29th to April 21st, 3 weeks. Then from that point, look at the sell-off. And then we got June 2nd to 417.44. Didn't even come close, right? Again, and it took from April to June. 2.5 months. Well, look where we are now. We're finally, this day's high is finally getting above all of this. So this is in line to be your next, is it your next lower high? Or is this market going to attempt to get to this lower high of 417.44? Now, there's a lot of work to do prior to that, specifically this gap. Now, we have a lot happening the next 8 days to the end of the month. We have huge tech earnings this week and next week. We have the ECB Thursday morning, and we have the Fed next Wednesday. So I think we're going to have a really good idea, possibly, if we're going to get legs to at least test this lower high of 417.44 from back on June 2nd. Or are we going to go up another couple of days and then that's it and have another lower high and then go down and make lower lows on the year? So this isn't just any old day today, for my money's worth. We're 7.5 months into this year. We just named 1, 2, 3, 4, 5 days out of that 7 months. Oh, I'm sorry, 6.5 months. Okay? This is not something to just take with any kind of sort of complacency. Are we going to get the ability to go acceptance above the 50 and get this? And the reason it's important is if we take out 417.44 at some point, well, then guess what? The highs for the year aren't out of the picture. I'm not saying that's going to happen. Obviously, there's a lot of work to do, right? But we can't even think about new highs on the year until we stop this progression of lower highs and lower lows. Make sense? Now look at the weekly. So those were 4 days I showed you. Here's it on the weekly. The week of January 3rd, all-time high. Then here's that 460 level, 462 level, March 28th. Then here's the 417.44. And now look where we are, attempting to come above the 4-week balance. Haven't done it yet. We didn't get it. We missed it today by pennies. Look what happened last week. We missed the weekly balance low by 370.18, by less than $1. And we went from 371 to 393. 393 just about. So this is, we can't even think about a stop in lower highs until we come out of this 4-week balance. So that's critical what happens going forward. Now, I know this is longer, but I hope this is helping. Look at Russell on the weekly. Russell is above this 4-week balance high. Look at Russell's next big destination, 190.94. Now, again, on the daily, they have to fill this gap. They still have a lot of work to do. But if they do, we're going to get some pretty good upward movement to that next big weekly and monthly high. And then look at triple Qs. Here's the weekly. They're coming out of a 4-week balance, again, to the upside. You know what their next target is? 312.35. However, they have to finish what they started today. Fill this gap at 299.23. We got within 63 cents of it. Now, based on what's transpired this year, do we expect the market to fail at this level? Well, because everything is based on odds, I would say, yeah. I would say, you know what? Just because they got above this 4-week balance high, Russell and Qs, one day doesn't make a market. We need to see acceptance above that. SPY and ES never even got above their weekly high. So we got to get it and get acceptance. So since 2022 has been the year of sell every vicious short rally, I'm not sure what's going to happen yet. But I'll make you a bet. I bet you by the end of next Friday, when all that stuff is done with the tech earnings and the Fed and the ECB, we're going to have a pretty good idea if it failed again miserably or we do have legs to stop the lower highs for the year. Hope that helps a little bit to put things into a bigger picture context. Thanks for the likes and subscribing. Tell your family and friends about this YouTube channel. Hope you had a good day trading. Enjoy your evening, and we'll speak prior to the opening tomorrow.